Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, December 3rd. Hope you guys had a wonderful weekend. And we got a few economic news here today on the economic calendar here. Just one little tidbit for Wednesday. We won't be doing this report on Wednesday primarily because the stock and bond market will both be closed due to the former president Bush's funeral plans. They're going to be having a day of memory. So in commemoration, the stock and bond market both will be canceled or will be postponed that day and then reconvene back on Thursday. So as they're closed, I figured it's kind of pointless to do these videos. I do a video on that day when the market's not even open. Also, the data that will be released that day, we still don't know yet if that will be released that day or if it's going to be, again, postponed and moved to Thursday. So whether either case, what I'll do is on Thursday, if it's reported on Wednesday, we'll go ahead and report both Wednesday and Thursday's data, or if it's just released on Thursday, regardless, it's going to be moved to Thursday. So again, Wednesday, there won't be any video as a follow-up. So to move forward with today, so we have a couple manufacturing data here, indexes. We got first the market manufacturing PMI for the month of November. So previous reporting came in at 55.4. It had a slight dip down to 55.3. However, on the ISM manufacturing index for the month of November, in October we had a 57.7%. Forecast was calling for 58% and it increased to 59.3. So a little bit mixed right there in terms of manufacturing data that came up. Anything above 50 on these indexes, most of the time if you see these like 50s, 60s or these type of indexes, they're going to have the indexes, what they mean is anything above 50 is considered optimism or expansion, or anything below this contraction or pessimism. So on this one, of course, this is both expansion or in optimism in the manufacturing industry. So for the most part, they're still doing quite well. The last but not least, we got the construction spending for the month of October. So September, it dropped slightly to 0.1%. Forecast was calling for an increase in construction spending for October. However, it came in another month of a drop of 0.1%. Right now, the stock market is up. Had early going, it was actually doing really well. I was up. The Dow was actually up over 400. Since then, it's subsided a little bit down to about it's in the 200 range right now. And of course, the big news that broke over the weekend was the U.S. trade China negotiations. President Xi and President Trump both met over dinner on Saturday. What they did was they called a truce. So what that means is over the next 90 days they're gonna hammer out negotiations in earnest. And so while they're in this period, the U.S. had elected they're not going to go ahead and raise the tariffs on the 200 billion on trade from 10% to 25%. They agreed to withhold that and any other actions on there. On the other hand, China has agreed to either remove or reduce auto tariffs, which were at about 40% on there. Also, they agreed they're going to be taking in a large consumption of imports, bringing in. So that's going to be coming from trade and energy. I'm sorry, agriculture, energy, and some other areas in there as well. But those are so the market's really liking this quite a bit. So. Again, the stock market was up like 400. It was really up there. It's kind of subsided a little bit. Where it goes at the end of the day, it's kind of hard to tell. And then some other ones are getting some other minor news, but it's relatively big because Russia and OPEC agreed that they're going to be cutting back on oil production. So oil prices have been climbing on that agreement. They're supposed to be meeting on December 6th, and so this is kind of a little insight as to oil prices are going to probably start rising a little bit as a result of the agreement with the Russia and OPEC on their output, on their cutbacks on oil production there. So let's see how this is affecting the bond market. The bond market started the morning way up when the Dow was way up about 400. We were down about 20 basis points. Since then, we've been kind of subsiding, and we're pretty much about uneven or about unchanged from where we left off on Friday. So East Coast, who gets the rates out a little bit sooner, probably will have a price correction here as the market's changed. And so East Coast will probably get a price correction. Here on the West Coast, we'll probably be basically about the same. So there won't be any price changes from where we left off on Friday as a result of that. So we've been kind of in this, since this morning, is kind of this momentum. We were kind of climbing up. We were even up 3 basis points since I took the screenshot. But right here, we're kind of showing about -2. So we're kind of this range at around unchanged levels right now, which is not bad considering the news that we got, which is pretty big news for mortgage-backed securities. It's kind of hanging in there. So again, this is something we got to watch because, as I pointed out last week, we're kind of in this overbought position right now, and it could easily, once it goes this negative crossover, it brings us back to this level. We could drop quite a bit here. So again, we have to kind of watch this. Uh, this possible for a negative crossover. On the other hand, we got the 10-year Treasury. It just barely breached the 100-day moving average on Friday, and it started the morning, in about the same range, but we've been testing it. It's been trying to break above it. We're still seeing about just under the 3.01, like 3.060066 basically. So it's just hanging just below this 100-day moving average right now, and it's trying to break above it. And as you can see here, this is looking for a positive stochastic crossover because right now it's considered a oversold position, and trying to break above back into more of this neutral level here. So if you guys are out there, you guys got transaction going from either refinance or purchase, you can kind of float a little bit longer, but again, I would definitely put a finger on the trigger so when it's ready to change, you're ready to lock in. You could save yourself some money on shorter days, for lock periods from 30 to 15 day, or if you had a 45 to a 30 day, you could save some money in that case. So this is something you could probably kind of do, but again, make sure your guy is out there with a quick finger on the trigger. All right, so that's going to wrap things up. If anything changes, I'll be posting on Twitter any market changes. I'm under Mike Bjork, so you can follow me there. You guys have a great rest of your day. We'll look forward to see you guys tomorrow, and thanks so much for watching. Bye-bye.